I found this news release on the website of Energy Fuels, who is a US-based uranium producer, and I thought this commentary was a perfect depiction of sentiment currently in the uranium market. The CEO of Energy Fuels is addressing shareholders in this news release, and he says, "I don't have to tell you that these are frustrating times in global uranium markets. As you are likely aware, spot uranium prices are presently at about $25 per pound. These are the lowest levels observed since early 2005, or earlier if you adjust for inflation. The simple fact is that the world is currently oversupplied with uranium. Utilities appear to be well covered for now. When fuel buyers purchase uranium today, at least in relatively small quantities, it has been widely available to them on the open market at low prices. There is even a view among some that nothing will change for the foreseeable future, and hence prices will remain low and oversupply will persist indefinitely. Complacency is a word that comes to mind. As a result, there is limited urgency for utilities to cover the large uncovered needs that start to emerge later in this decade and early next decade. However, many of us who have worked in this industry for a long time have seen this type of behavior before. In earlier times of low prices, uranium production dropped, exploration expenditures plummeted, and there was little new investment in needed large new mines. The last time these conditions prevailed was in the early 2000s, right before the last major increase in uranium prices, which peaked in June 2007. In my view, today's market activity is laying the groundwork for the next recovery in uranium prices, and uranium buyers are being complacent at their peril. So I think the CEO is saying a couple critical things in this news release. The first being that the last major uranium bull market that ended in June 2007 was kicked off by the bear market in uranium that occurred in the early 2000s. So he's saying that essentially the next uranium bull market, the seeds for that are being sowed by what's going on over the last 5 years with this major bear market in uranium. And the second thing which stood out to me is that using the word complacency when he's describing utility companies and how they feel that low uranium prices will persist for a long time, which will be make it easier for them to purchase uranium and to cover their supply needs. And if you look up the word complacency, it actually says a feeling of smug or uncritical satisfaction with oneself or one's achievements. So in other words, you can kind of think of complacency as, like almost like a mild euphoria. And when I thought about that, that led me to this chart I've shown before on my website about stock market cycles and how in bull markets, optimism, excitement kind of leads to euphoria in the top of a major bull market. And then once the market tops out, you get all these, different kind of stages of denial, fear, then panic at the bottom, and finally depression, where nobody wants to be in the market anymore. But this is where the new bull markets are born. And in stage analysis, this is why we look for breakouts into stage two off of stage one bases and new bull markets. So I would kind of call the utility companies in the uranium sector kind of right here in market cycles being, complacent with low uranium prices. And I mean, just from the tone of this article, you wouldn't see something like this addressed to shareholders in a market that's doing well. This is really the type of letter that gets sent out when everybody's depressed and feeling like nothing good is ever going to happen again. So the bottom of the uranium market really is, or the uranium market really is down here, just in the gutter. So again, this is, that news release really caught my attention because of kind of how it spelled out sentiment and where things are currently at. Now, from a stage analysis perspective, I think last week's action in uranium miners was critical in identifying the uranium market as a potential new stage two bull market because of the strong volume that occurred across uranium mining stocks. And what I try to do with stage analysis is really from a visual perspective. When I look at this graph, I try to find markets that look exactly like this, because I want to buy stage 2 breakouts or pullbacks to the 30-week moving average on the first retest. That really is a great second low risk buying opportunity to buy early into a new bull market. And if you look at charts of uranium, they really look exactly like what we're seeing here. So if you look at a chart of the uranium mining ETF URA, you can see the stage 4 decline, stage 1 base that I've talked about recently in past videos, and then last week we saw URA advance on 9 times average volume for the week. And last week was one of the first, full weeks of trading in a while. So, the volume here kind of really tells me that there's a good possibility that uranium is back in a new bull market. And, that's never a guarantee, because look at what happened back in 2014. We did have a nice breakout on above average volume. It did fail, so that can happen. But again, nothing's ever for certain in the markets, and we're all here to play odds. And from a stage analysis perspective, this looks like a great potential breakout. And notice this is coming off of multiple weeks of strong volume. 2 weeks ago, we did 4 times average volume, and the weeks before that were more than 2 times average volume. And full disclosure, I am long this ETF. Now, Cameco, the largest North American uranium producer, last week did 3 times average volume and was the biggest volume in this stock for the week in multiple years. Again, signaling that this looks like a solid stage 2 new bull market. And if you look at the stage analysis screener across a number of uranium mining stocks, we can see that across the board, if you look at the volume column, there was above average volume in almost every stock, which again is what you typically see in new bull markets when big money comes flowing back into the sector across all different types of stocks in the sector. And one other thing to note is that the number of weeks that uranium miners have been in a new bull market is still on the low side, which is what you want to see when you want to try to identify new bull markets, which is why I started talking about uranium back in December, because it was a potential new opportunity, and that's really where you want to jump on top of things as early as possible. And the last note on this video is I want to talk about positioning in a new bull market and really how you make big money in new bull markets. And in this article that talks about 9 surprising things Jesse Livermore said, the big takeaway from what this article says is that some of the most useful bits of knowledge from the book Reminiscences of a Stock Operator are kind of talk about time frames and patience. And really, nowadays with financial media, everyone wants to talk about what's happening next and what are you trading, but the way you make big money in the markets is by not doing anything really. It's getting positioned in a market and just sitting there and allowing the bull market to take place. And as that time goes by, gains build up, and that's where you make the big gains that offset the small losses that you take when you make bad trades. So the only way to make money in the markets is to have your big winners overwhelm your small losers. And to do that, you just have to sit there in bull markets and let the gains pile up. So some of the things that Livermore said in Reminiscences of a Stock Operator talk about, some of these quotes say money is made by sitting, not trading. It takes time to make money. It was never my thinking that made the big money for me. It was always sitting. Nobody can catch all the fluctuations. The desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street even among the professionals who feel that they must take home some money every day as though they were working for regular wages. Buy right, sit tight. Men who can be both right and sit tight are in common. Don't give me timing, give me time. So, again, learning from Jesse Livermore is all about, this is one of the main takeaways of that book is that, it's just really hard to make lots of money all the time trading. It's a lot easier to let market cycles take you along with them and hold during, big trades in bull markets. And to get more information on stage analysis and understanding these big cycles in the market, I recommend going to my stage analysis page at nextbigtrade.com, where I kind of outline the system and definitely make reference to the book Secrets for Profiting in Bull and Bear Markets, where Stan Weinstein talks about how stage analysis works and gives a ton of good information that I read every year when I go over the system.